late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So today we're going to jump back into the charts, get a look at what's going on in the market. It's a pretty crazy day, super volatile. We got markets all over the place in terms of kind of the global performance, as well as a pretty crazy open and flip here in the SPY and NASDAQ. So we're going to flip over to our other screen here. I just want to start off here. So pretty much I just want to emphasize I've kind of been sitting on my hands for the most part here. That being said, I have been taking swing trades or scalp trades. So these are ones that I do share in my Telegram group. Often during times of kind of a lot of volatility, uncertainty, or maybe we're in a downtrend. So if we look back over here, we'll just take a look at our high time frame chart and get an idea of what's going on. So basically, we've pretty much been out of the majority of our high risk positions since up here towards 100,000, and we've just been downtrending in this market. So I just want to showcase to you, we have been able to take advantage of opportunities during this downtrend to actually make money without having to short the market. You know, shorting, it's not for everyone. I don't always love to short, especially unless I'm kind of really believing in that thesis that we're going to continue to the downside. You know, markets can make a fool of us all. That's why I just focus on the strategy. Look at those high time frame support levels, key levels where it makes sense to maybe pick up a little bit for that bounce play, and then capitalizing on those profits. So we can see essentially my thesis initially was up here. Every time we drop to those low 90s, picking up a little bit of Bitcoin and selling it kind of into the mid or upper 90s. And then similar to what we saw over here, after we broke below this resistance here, you know, picking up Bitcoin here at the low 80s, high 70s, and then unloading when we get that little bounce play to the upside. So it doesn't look like much on the chart, but you can see here, this is 12 different trades that I've taken with my Telegram group. I share these when I do take them, and you can see we've pretty much come here. We have a total return of 27.8% unleveraged. So I use about 5 to 10 times leverage on my swing or scalp trades. So that actually is 125 to even 278% returns just on this swing trading capital. So we see here we've got a win of 8. So we have 8 wins here. You know, 8 of these trades have been profitable, or at least, and then the current one that I have running right now from 77,200, that's my average cost. Looking for a target of about 92,000. We've got our stop loss right here just below our average price, so it's relatively risk-free. Because we also booked 50% of the profit, then this is a risk-free trade. So we see here we have 8 wins. We've got 1 break even here. So right here, we closed this trade at a 0% break even. We just kind of noticed that the structure in the market changed slightly, and we cut that. So that's another thing to pay attention to. Just because I open these swing trades and I put these stop losses and stuff in place, it doesn't mean that I won't change my mind if the structure kind of changes. So this one, you know, we did have a plan to hold it a little bit longer. That being said, some things came up in the charts that made me worry a little bit, and I just rather would close that, break even, not take the loss, and then move on to the next opportunity. So we can see here, of the 12 trades we've taken, 8 have been at least profitable. 1 was break even, so I consider that a win, kind of. I'll put it in the win category, just because we didn't lose any money on it. And then we have 3 losses here, so we're looking at a win rate of 75%. And then based on my strategy, if you have a 3 or more risk reward ratio, you only need a win rate of 40% to be break even. So anything above that, you're profitable. We're at our win rate of 75%. We're profitable, and we've made about 28% unleveraged returns while the market has been trending down. So the stock market is down 20%, Bitcoin is down, 20-30% from its highs, and we've made 30% 30% profit during that time. So nothing to really scoff at, you know, despite the fact that I have been sitting on my hands in terms of the larger cash spot position that I have, that I'm looking to kind of enter on lower targets on confirmation. We've still been able to take advantage of the moves, you know, really looking to capitalize every single time we get those opportunities at those high time frame supports, and then conservatively booking profits. And you can see that's how we compound returns. So we can make money both in an uptrend or a downtrend. We use the same concepts, the same technical analysis that I teach. We just use it on the lower time frames. So rather than focusing on the high time frames like the daily and the weekly, which we do for kind of spot, more accumulation, high time frame confirmation, you're going to look at the 15-minute, the 1 hour, even the 4 hour. Those are going to be your lower time frame moving averages, time frames to pay attention to in terms of swing or scalp trades. So we're going to move on to the macro here really quick. Actually, I will just touch a little bit on Bitcoin. So we're seeing a nice bounce here. Look at this big volume bar coming in here, kind of similar to what we saw over here. So we got a previous rally this time of 20%. Currently, from our low to our high, we're up 10%. So we could see a rally into somewhere up here. There's a lot of resistance here. So what we see is we've got all of this, these order blocks here. So sell order blocks, people waiting to sell their Bitcoin or exit their positions. We see we've got our bearish cross of this moving average. So that has confirmed that death cross. We're stuck underneath our VRVP point of control. So that's this bar right here, this biggest horizontal bar there. We're stuck under that. We're stuck under our moving averages. We're stuck under horizontal support, and we've got sell orders above here. So we're going to look and see, we're still holding this position for now. We're holding 50% of it. So although I have exited a little bit, that's just to take the profits to pay myself. We've moved our stop loss up. We're risk free. We're now riding this free trade. So this is a house money position. That's when I talk about when you go to the blackjack table and let's say you start with $100 and you make $100, take your 100, take it off the table. That's your money, and now play with the house money. You're now risk free, and you can go and gamble to your heart's desire, or invest or swing trade, whatever you want to do, but really focus on getting those trades risk free as fast as possible. So we see here we came down below 76,000. We actually on some indexes even dropped below 75,000, so quite a big wick right down there. So we'll continue to see what's going on there. But if we look, I want to show you pretty much similar times in Bitcoin's history where we have had this death cross. So sorry about that. I'll get rid of that. We can see here. So basically, two different instances that I think could be resembling right now. I'm kind of on the fence that we're more likely to be in this scenario here because we had our double extension and we've had our double death cross. So what we saw this time, but it's kind of the same price action either way. I'll zoom in. You can see right here we confirmed our death cross. We already had our lows, so the lows were in by the time the death cross actually occurred. Same thing over here. By the time this death cross occurred, these local lows were in, and you can see price rallying back up to the 200-day moving average. Same thing right here, rallying back up to that 200-day moving average. Right here we got rejected and we continued that downtrend to the bear market. Over here, we were able to get continuation. So I'm not sure what we're going to get. It's impossible to really predict that. I don't have a crystal ball. That being said, we can kind of expect maybe some sort of similar price action. It's hard to say where the low is going to bounce, but that's why I've been building swing positions down here. I do think we're going to get a relief bounce. We're at least likely going to we could come down, tag these lower targets here before going back up to our first sell order blocks. And then you can see if our 200-day continues curling over like this and our 50-day starts to curl down like this, that's that 200-day moving average retest. So we could look for a move up into the mid-80s as that 200-day moving 200 moving average retest and into that sell order block. So that's something we just want to pay attention to. You know, if it plays out like that, That's going to be good. We're still going to take our swing position. Best case scenario is we get a continuation, something more like this over here, in which case, you know, we're just waiting for confirmation for that trend, get in the trend, and then ride it to the upside until we get those signals telling us to exit. We'll flip over here. We're going to take a look at the dollar really quick, getting some nice strength from just below the 200-week moving average, also wicked below this trend line. That being said, we're looking like we're headed for that death cross as well, so watching that. We see the VIX up 20% again. Look at that, guys. I told you, I warned you. I said when the VIX starts spiking, expect the SPY to drop. It's why we've been sitting on our hands. It's why I haven't been interested in getting aggressive, putting too much money into the market. I'm just looking at short-term opportunities. That being said, we're at a point in the SPY where I have added to my long-term position. So look at this, guys. This huge drop. Like, we haven't seen us drop this fast in years, where it came down just within kind of a fraction, not a fraction, a couple percent of our 200-week moving average, but we're like 20% off our highs here. We take this, we see 22% from the high to the current price. So I'm expecting a bit of a relief bounce at some point. I can't call where the bottom's going to be. That's impossible until we see it on the charts. That being said, I have added some SPY to my long-term position, my long-term holdings. You know, I'm happy to buy at a 20% discount from the highs. If it drops more and we go into a minus 30% correction, more similar to other recessions, I'm just going to buy even more, and I'm going to ladder those buys up. So that dynamic DCA, I think now is a good time to start your dynamic DCA strategy if you haven't already. At least that's what I'm going to do. Just recognize we're still in a downtrend. I don't know where we're going to get that bounce. I'm okay taking that risk in the SPY. I'm not making huge buys right now. These are my initial buys in my dynamic DCA strategy, and I'll look to take advantage of lower targets because we could ultimately come back to lower potentials here. But that being said, there is value kind of on this in this area here. Take a look at our momentum indicators. So we look at the daily. We have had buyers step in here on our big money indicator, similar to what we saw over here. Two buyers stepping in on the daily, or two gold bars flashing on the daily. We're more oversold than we were over here. We're more oversold on the MACD. We do have kind of bearish momentum is the favored trend right now on the daily in terms of our vortex indicator and our DMI. That could change. We'll take a look at the low time frame and see what those are saying. So we can kind of see here, I'll get rid of this. It's also good we see on the 4 hour another buyer stepping in there. But ultimately what we see here, the vortex indicator is starting to kind of curl down. So you see that downward momentum curling back over. So what we want to see is this to kind of give us a little bit better of a bullish setup. You know, even if we go to the lowest time frame here on the hourly, that's where we can see that bullish momentum starting to build. So we can still go down more, where it's only the hourly right now. It doesn't have to hold. We could bleed even further, but this is a nice buying candle in through here. You can see that obvious increase. Look at this, just flat volume all through here, and then a big little buy candle in there. And decent little setup on our momentum indicators. So as I said, dynamic DCA, not a bad time to buy. Just be sure that you're willing to take advantage of either further downside or be willing to weather further downside. So I still maintain a large cash position. I'm still waiting for confirmation on the charts before I lump some into any positions on any meaningful basis. But that being said, I recognize the value being down 22% from the top of the SPY, looking to capitalize on a bit of a bounce play, similar to what we're kind of doing with Bitcoin. Kind of the same thing across the board here. I'm not going to go into all these because they're going to look very similar. The QQQ or NASDAQ here down 1%, Dow Jones down 2%, IWM 2%, TLT down 2%. So that's also interesting that we're seeing kind of everything down across the board, even TLT. So even that flight to government bonds, everybody just, I think, wants cash right now. We see the dollar up and we see the Swiss franc up. We did see the yen up briefly, but it's flipped red for the day. So Gold's down. Basically what I'm seeing is everybody's kind of just nervous. They don't know what's going on. They're pulling their money out of everything they can. Everything's dumping. We're getting some buyers stepping back in at key levels of support. That's what we're seeing from Bitcoin around 75,000, and what we are seeing from the SPY from these levels as well. So we continue following that, but we can kind of continue. I just want to show you here the Japanese, or it's not the Japanese, the Chinese stock market down 13% today. They were closed Friday, so there was a little bit of catch up to do with the US markets, but we see that just huge drop in the Chinese stock market. We saw the Japanese stock market being halted today. So there's still a ton of volatility out there. We still don't know what all the nations' reactions are going to be in terms of tariffs. We're going to have negotiations, but we're also going to have retaliations. We've had China retaliate, South Korea said they'll retaliate, Canada has said they'll retaliate. Europe is willing to discuss that tariff-free trade zone kind of deal, as well as a bunch of other countries are willing to negotiate as well. There's still too much uncertainty, too much volatility for me to be taking a lot of risk in the markets, but we're starting to see, you know, we're getting to those really oversold territories. We're getting a little bit of relief from key levels. We're seeing some kind of de-escalation on the tariff front, but that being said, it's still, you know, nobody really knows what's going to happen. It's been one weekend and nothing happens on the weekend. We saw Bitcoin pumping up, ultimately just dump, give up all its gains and more over the weekend, really just wrecking a lot of traders, messing with people's emotions. Nobody knows which way the markets are going to go every day, so we're just taking it day by day. The charts are going to tell us when it makes sense to enter in size, and that's what we're going to wait for. Otherwise, looking for little opportunities to take advantage of swing trades or scalp trades where they make sense, but we see just that weakness across the board. So not too interested in anything right now. Again, you know, Dynamic DCA, DCA, or even just buying into the SPY or the NASDAQ at current prices is not the worst time to buy. You're certainly doing better than the people who are buying up here. But that being said, remember, I say we can always continue to the downside more until that trend is supporting us. So that's something we need to pay attention to and keep in the back of our minds. I'm just going to finish off with just a little bit of kind of a anecdotal story. So this is about a stock trader. His name's Jesse Livermore. He's a legendary stock trader from the 20th century. He's known for being one of the most successful kind of retail traders of his time. So pretty much he always invested with his own money. He's in a similar situation to a lot of us. You know, as retail investors or as people who have taken their investing into their own hands, you kind of you have to really focus on the strategy of it. So it's not as easy as just putting money into the market. I mean, it can be, but at the time, also at the same time, it's not going to give you the best advantage just to be blindly putting money into the market. A lot of the times too, you're looking for people to tell you when or what to buy. So you might be looking to people on the news, you might be looking for different forums, that kind of thing. That's not really what we want to do. We just want to figure out the assets that we want to hold. So for me, I want to build a long-term investment portfolio. So I like things that track the market. I like Bitcoin for a little bit of added volatility, kind of that disruption sector, you know, looking at Mag 7 stocks, also looking at passive income vehicles, so high interest savings accounts, bonds, you know, dividend stocks, anything that can help you kind of achieve your end goal, your strategy. That's what you're going to do. So there's just a few lessons though that are across the board. These will apply to every retail investor. I think really just focusing on these aspects can take away a lot of the emotion and help you on your own journey. So the first thing is following the trend. There's that saying, the trend is your friend until the end. That's what we say. That's kind of what I preach. You know, over the years, I've done it all. I've ridden trends. I've tried to time tops and bottoms, and it's a lot harder to accurately time the top or bottom. It's much easier to follow the trend or time the trend. I'm not here to try and buy into knives. So same thing. When I show you on those charts, when we're buying into resistance, there is that potential for it to continue dropping to much lower targets. We don't want to be in our positions for that. So we're following the trend, cutting losses fast. So it depends on your position. You know, if you're just building a long-term position in the SPY, it might not make sense to cut that position just because you see a little bit of weakness in the market. If you have really volatile positions or leverage positions, and you start to see the market going the opposite way of kind of what you expect, and you have that confirmation on a technical perspective to cut those trades, then it makes sense to do so. So that's kind of something I had to do when we were up a lot higher, up towards 100,000. I was taking a profit on a lot of stuff, but I did also have to cut some losses. So some other positions that I was down on, you have to cut those losses and minimize that risk, and then focus on your long-term conviction bets. So for me, that's stuff like the SPY, Bitcoin, other things like that. Letting the winners run. So when you're right, stay in the profits, let those profits grow. How I do that is using stop losses. As my trades get into profit, the more and more profit I get into, I just move those stop losses up continuously, protecting that profit. And then if the market turns around, let's say my stop loss gets hit, I don't mind. I've booked profit, I'm out of that position. I then can reevaluate whether it makes sense to re-enter or stay out of that position and wait patiently. Another thing, trading with conviction. Only act when you're confident. So based on observation, evidence, data, and charts. Don't invest based on emotion, your gut, or rumors, or what other people are telling you. So a lot of the times, following the herd can be very profitable, but you need to get out of the line before you end up at the slaughterhouse. So that's kind of a saying I've come up with. You know, follow the herd, but not to the slaughterhouse. So we want to obviously follow the trend. That's what the majority of the market is following. But at a certain point, people are going to take profits, people are going to sell, and the herd is going to get slaughtered. And you don't want to be in the herd when that happens. So make sure you're trading with conviction. Make sure you understand psychology. I talk a lot about managing your emotion, managing human psychology. I think it's the biggest factor that retail investors need to overcome is human emotions. That's why I focus on a technical backed strategy that's in long-term assets that I believe will be around for a long time and continue to appreciate in value. You know, watching crowd behavior is really important as well, but not acting on crowd behavior. So use it as kind of another indicator of what could happen in the markets, and then but not acting on that emotion. And then money management, obviously I talk about risk management. Never risk it all on a single trade. You can learn, a lot of people learn this the hard way. You know, we're here to make compound returns over a long period of time. This isn't the casino, this isn't the slot machines, this isn't the lottery. We're here to take calculated, risk-adjusted positions, get in these trends, ride them to the upside, book those profits, rinse and repeat, and build our financial freedom, build our future. And then when we get to our goals, then this is how we're going to do it. We're just going to pretty much focus on our strategy. It all comes down to kind of managing that emotion in the end, but you could break it down into a million different little different factors here to keep in mind. But don't overcomplicate things. You know, manage your emotion, manage that risk, and get ready, because there could be more downside in the market, or we could see relief to the upside, in which case we're going to look for that confirmation or that potential technical trend reversal. So thank you so much for watching, guys, and I'll see you in the next one.